Welcome to Hard Hats, High Heels. I'm Katie Kettleson. I'm sitting here in the Bankers Trust office with Deb Buenting, and I want you to know Bankers Trust is a sponsor of Hard Hats, High Heels, along with KDC Built, Garden Grit, and Homestyle Staging and Redesign. I'm really kind of excited to talk to you about today. We're talking about mortgages, refinancing, and all that business. And the reason I'm excited is because the hubs is chattering over my shoulder about, well, should we refinance the house and stuff like that. But briefly talk about what you guys do at Bankers Trust in the refinancing and kind of what that whole spiel is.
There's a couple different ways that we approach customers. Is if they call and question us about refinancing, we'll go through some basic information. We're going to need to know how much their house is worth, what the value, what they think the house, not what they necessarily think the house
right,
is worth.
Because everybody thinks it's more than what it is,
Absolutely.
right?
It's what is the market saying that the value is based on other homes that have sold in their neighborhood that are very similar to their home.
Okay.
And so that's been kind of a difficult item right now because people think that what their house was worth maybe a couple years ago, that's what it's worth today, and that's not necessarily true. It depends on the neighborhood, what's happening in your particular neighborhood at this moment. We're also going to need to know how much they owe, whether they have one mortgage or two mortgages.
Okay.
A lot of people don't understand that if they took out their first mortgage and then 2 years later took out a second mortgage, that's considered a cash out refinance.
Okay.
They've already taken the cash out. They're not taking cash out on the day that they're refinancing or starting that process. They've already done it. And so it's very, very important that they understand the pricing's a little bit higher and you're limited to the loan to value on a cash out refinance.
Okay.
Now if you did your first and second mortgage like together on the same day to purchase your home, that is not considered a cash out refinance.
Okay. You're talking a lot of big words at me, Deb.
Oh,
but this is okay because what's helpful with you guys is if I don't understand this, I can just ask.
Absolutely.
Grab a roll and be like, all right, you need to dumb it down for me, talk to me like I'm a third grader.
Absolutely.
But you mentioned, understanding the assessment, what the house is worth. I remember from speaking with Yvonne about how you guys use local assessors and underwriters. Am I saying that right?
It's appraisers is what we're going to use. Yeah, we're going to use local appraisers who know the market and understand the market here. We have an approved appraiser list that it gets rotated through. We have no say in our selection on the appraiser, but it rotates through. And it's people that understand the market. We're not bringing people from outside our market that don't understand the individual neighborhoods.
Right. I like that because who wants somebody from out of state telling me,
Absolutely.
I like that idea a lot. Okay. Yeah. So before we get in the nitty gritty of the refinancing, what kind of trends are you seeing in the mortgage world here, or just the refinancing or financing world alone?
We've been told forever that the rates are going to go up, they're going to go up, and they've been staying low. And so some of the people that have been waiting it out, thinking, oh, I missed it. Now we're starting to see a few more refinances happen. And but the housing market's changed a lot as far as values. The other thing that's changed a lot is underwriting. Okay. We have a lot more. Once we went through all the mortgage changes or kind of what they call the mortgage crisis, it was caused underwriters to tighten up a lot. So people don't understand. You can't just give us generic information and say, oh yeah, we're going to shake your hand and it's approved and out the door you go. We are going to ask for a lot of information, and we are going to keep coming back and asking for a lot of information because it's going to be, the more information we can provide to the underwriter, the better we're going to be.
The better I'm going to be, frankly.
Absolutely.
Because when I remember going through buying my house, which was about 3.5 years ago, they did ask a lot of questions, and it was one of the questions I remember. I'd gone from commission to salary, and they're like, well, what's up with this, And frankly, I was sitting in a better position, but had they not asked those kind of questions, I could have got denied without you guys understanding more about the situation. I guess I like that versus you guys actually caring and say, wait a minute, these guys look legitimate, let's just find out what's going on,
And so a lot of times if you fill out applications online, send it out of state or send it to who knows where when you're filling out applications online, and it goes to somebody who looks at it and says, not going to work, denied. And
I'm having a bad day.
But when you come in, you can come in here and sit, and we can go through things, we can dissect your file and information that you provide us, and we can make sure that we have a very clear understanding of what you're trying to do.
I like that. It makes me feel better. And frankly, if you don't have a bank doing that, then it's hurting the economy full force all the way around. So it's really better for everybody. Okay, so can we get to the nitty gritty about refinancing? And I'll give you my scenario. I know it's it's case specific, I understand that completely. But I have heard, and obviously correct me if I'm wrong, but there are good candidates for refinancing, there are bad. And from what I say, when I say bad, what I hear is if you're not going to be in your house for 7 years, it's not worth it, or something like that. So can you tell me kind of the right candidate to refinance their home?
The right candidate would be that they are planning on staying in their home for a long period of time, because there are going to be some costs. You can finance them into your loan amount depending upon what your home is worth and what you owe, but it's going to be dependent upon how long you're planning to stay. It's going to take an average of 18 to 2 years to 3 years to recoup your cost depending upon how much you're lowering your rate.
Okay.
So if you're not going to be there long term, or you're thinking you're going to sell in the next 3 to 5 years, probably not a great idea to look at refinancing. Also, our interest rates right now are very credit score driven. It's whatever your credit score. So if you've had a couple late payments on a credit card, that could affect your score and affect the rate that you're going to get. On a mortgage late, they will not accept anything in the last 12 to 24 months, depending upon your loan to value of a mortgage late payment.
Well, it's good to know the turnaround. Like, okay, a year ago maybe I had a late payment, you know, hypothetically speaking. No, I did. But it's good to know that, okay, I have a year to prove myself, and then maybe I can reevaluate the situation, right?
Right.
Okay.
And then the other, knowing what your values are in your neighborhood. I mean, paying attention to what's happening in your neighborhood. If you're seeing a lot of foreclosures happening in your neighborhood, or houses sitting vacant, that could affect your value. It's not to say that it's just today your value is at a lower value than maybe what you paid for it initially. But in Iowa, we're not seeing big drops. I mean, we're seeing more, some up, some down, but eventually, they'll go up, the values will. So if you're not selling today, it's not anything lost, you just may not be able to refinance immediately.
Gotcha. You brought up a good point. If you're looking at your neighborhood, and that ding ding in my light, because some of the houses in my neighborhood have gone through foreclosure, and frankly they're making the neighborhood look a little rough, So are you going to be able to do you guys look at the neighborhood? Obviously it's for the appraisal value in some regards, but will you be able to look at that and say, maybe let's just see what the next 6 months look like and how better your house?
Well, what we're going to look at is just how many houses, what have sold in your neighborhood, what are the prices that the appraiser's going to pull up and try to find 3 to 4 comparables to your home that have sold in the last 6 months to 12 months, and see how your house compares to that.
Okay.
And then they'll make adjustments accordingly to come to what they feel your house would sell for right now if you were to put it on the market.
Okay. Personal question.
Sure.
How much is the landscaping how much does that play a factor in?
I'm not an appraiser,
Come on.
but I don't know that's going to get you.
See, I'm a garden person, and so is my husband, so our yard looks pretty good.
Yeah, but they're still going to come in and do measurements and make sure, that's what your square foot.
So, is the other thing that I'm going to be looking for in the refinancing, if everything looks good, the closing costs. Where does that come into play?
The closing costs will be, it's normally going to be, depending upon what interest rate you select, it's going to be somewhere around a 1% origination fee, which is 1% the amount you borrow.
Okay.
And then plus about $1,700 to $1,800 of closing costs, which will pay for your appraisal, credit report, and those kind of items. Now, depending upon how much you owe and what the value is, you can add that into your loan.
Okay.
But that's where you don't want to be adding that into your loan if you're going to be selling it sometime in the near future.
Okay.
So that you'd be adding that into your loan, so you'd be increasing your loan amount of what you owe right now, and then, but you'd have a lower interest rate, so it would still be paying.
So hopefully it wouldn't just even out, right?
Right.
Hopefully you'd still be saving money.
Exactly. So now, and some people's goals, right now we're seeing a lot of people that their goal is to reduce the term because the rates are so low. So we're seeing a lot of 15-year loans being done. So that, they've been paying on it for 10 or 15 or maybe 10 years, and they want to take an additional 5 off and get their payment staying about the same.
Okay. Another question on slightly different. A new mortgage. Are you seeing a lot of 30-year, or are the average being 15-year, just on a straight new mortgage?
On a new mortgage, it will be 30 years.
30, people, always that way?
Mm-hmm.
See, that's
we've got a lot of people coming out of college that have student loans. Yes. They have, the economy's not strong. People are not feeling confident to say, I have this job and it's going to stay here forever, and I'm going to take a 15-year mortgage because I know I can pay it down quickly.
Okay.
They're taking the 30-year and knowing they can pay extra because there's no prepayment.
Okay. Is there anything that I would need to do to prepare for you or get information together for you to, how do I want to say, for me to come in and talk to you for the first time? Is there anything I should get together?
You would want to get together how much you owe.
Okay.
And then kind of know what your income is, what your debts are.
Okay.
We do not require you to come in with any information. We just want to know some basic stuff of what's happening, how many mortgages, about what you owe.
Okay.
One way to figure out what your value is, don't pay for an appraisal because we will order our own and we cannot use the one that you were ordered. But if you have a real estate agent that you've worked with previously or somebody that's selling homes in your neighborhood, just give them a quick call and ask kind of what houses are doing in your neighborhood, and if you've done any improvements to your house, let them know that, and then they can kind of give you a ballpark of what your price is in your neighborhood or a range, and then if you feel comfortable with that, then that's a good place to start.
Okay.
Yeah.
How long does the process usually last?
From start to finish, it's usually we'll lock a loan in for 45 days, which means that rate will be guaranteed for 45 days. We just need to, from the beginning to the end, we have to have it closed.
Okay.
And on a refinance, you have to remember if you're living in that property, we have to give 3 business days at the end for your right to cancel because it is your primary residence.
Okay.
So it's usually we're closing around that 30 to 40 day, and then we're waiting out the 3 business days.
Alrighty, sounds good.
Well, I guess, and one of the good things about Bankers Trust is, as we all have been here for a long period of time, we have a lot of experience here at Bankers Trust. Guidelines and regulations and underwriting is changing on a daily basis. And every lender, just because you say maybe it's a Fannie Mae loan, every lender has or investor has different Fannie Mae overlays that says, we'll only take this or we'll take this and we won't take this.
Okay.
And the good part is at Bankers Trust we have the experience and the knowledge behind us, and that we have a team. We each have the same processor and closer for every loan.
Nice.
And our team is located here.
Right here.
In our branch, yes, absolutely. So if I need to physically go touch my file and look for something, I can do that.
That's
at
nice.
any point in time.
So, do all your refinancing or people like you, Deb, are they located at the Clyde branch? Is this where I need to come?
We have Clyde. We have all of our. This is where our department's located at.
Okay.
But we have availability to go to any of the branches and take loan applications. So if it's easier for you to meet at the Southside branch, we would meet you there and go through the application at that branch.
So wherever works best for you.
Absolutely. Probably not Burger King or something. Any one of our 11 locations.
I didn't know you had 11 locations. Better check out the map next time.
Absolutely.
Well, Deb, I thank you so much for walking us through this. It was a lot of big words, and I'm not very good at these, but what I like is that I can be like, wait a minute, what's that mean, Deb? You know?
Yeah,
and
absolutely.
So I think that's where the face-to-face, coming in, making an appointment with you, walking through the steps really helps. I know this is I think it's a hot topic right now.
Well, the other thing is that, I mean, calls are going to get returned every day.
Oh.
And so you can call some of the other lenders, and you may have to wait till they filter through all of their phone calls. So give us a call. Any of the originators can assist you, and we'll get your call or get you heading in the right direction if you're the right candidate for refinancing.
Great. Thank you so much, Deb. I appreciate all your insight. Obviously, I will have Deb's information here, contact information, if you want to give her a call, shoot her an email, or just check out bankerstrust.com, or just, give them a call. You guys are very personal on the phone. You guys are going to shoot us in the right direction.
Thank you.
I want to thank Bankers Trust for being our sponsor today for Hard Hats, High Heels, and KDC Built, Garden Grunt, Homestyle Staging, and Redesign.